Okay, so we're back here and we were having some bandwidth issues. So um, anyway, this is where you sign up here, the homepage here. So this is the sign up here. And when you go there, it will actually take you to the option to sign up for the newsletter or sign up for the gold package. This is where you come for the free member login here, and then the gold member login and the newsletter login there. So that's what it looks like. And so yeah, that's where you go to sign up there. So next slide here is going to be talking about the different Twitter pages and what they look like. So this is the paid Twitter page here. This is the one where for the gold member package. So you would go here. This is what it looks like. So it's the one with the red logo, and that is for the paid members. This is for the gold package members, the Wolftrader 1 uh, page here. And if you go to the next page here, this is the one that's for the free members here, and you can go there and check this out. And that's free for everybody. And I've noticed here that I posted a tweet here in the top of the page. This was on March the 20th, and I spoke about the S&P, how I was very focused and adamant on the fact that we were going to make a recovery here. This was on March 20th. This was well before the bottom, and I talked about how that I felt very strongly that the S&P would rebound off of those levels around that date. So I'm keeping this tweet pinned up here at the top because I want everybody to see that I've been saying the same message from the beginning. I've really never changed my tune. I never turned bearish on the market at any point. I never really got to a point where I said, wow, this is going to be a depression or we're going to go off the cliff here. I was very clear about, like I said, what I was stating. This is the YouTube channel that you're on obviously right now. So that's a good thing to try to check that out. And this is a slide here of Jerome Powell talking about that nothing is out of the question, what it would take for the Fed to start buying stocks. So the Fed has really stepped up the game here in terms of the quantitative easing, and they've also stepped up the game in terms of what they're going to do by buying up even public debt, and now possibly buying stocks is on the table for the Fed. So you have to understand that everything that we see now is going to be in the context of the Fed, and that Fed is just ultra strong right now. We saw at some points that the Fed was up to 71 billion dollars a day. So it's going to be very hard for this market to go down at this point, even if we have negative astro coming up in the coming months. This is the fear and greed index of the CNN fear and greed index. So right now this is hovering down around 42. So that's still a relatively bullish level. We did have a pullback in the last couple of days, but this is still showing that the markets are seeing a more or less still bullish sentiment on this rally. This is the fear and greed index over time. So you can see that it came down to these extreme fear levels here near these March lows into here. And now it kind of came back up. We're not even up to the 50% level right there. So the fear and greed index, I'd say, is still favoring the bulls at this time. So one of the things that we talk about here is that to have an advantage that you want to have the tape and the cycle together. So this is really the core of what we do here when we talk about creating an advantage. An advantage is not necessarily a trade. It's an ease of movement. So what I mean by that is that when you have a market and you want to determine where there's going to be an ease of movement, either to the upside or downside or sideways, you want to take the market tape, which is the evidence that the market is giving you. And that can be in many forms. It can be a simple MACD, or it could be the Fed juice in some cases. And you want to take a cycle. Now that cycle could be it could be a solar cycle, it could be a transit, it could be the planetary speed index. So a lot of times we use the planetary speed index as this for the S&P. So it depends on each symbol that you're looking at, but that's really how I define an advantage here when you're doing a mechanical trade, and that's really what we're looking at here. And this is an example here of how you would determine an advantage. So this is the S&P 500. This was a while ago. This was, probably back in I think 2018, 2019. And so when you see a symbol, when you see a graph like this, it's kind of hard to make sense of it because there's so many arrows. And part of the problem with getting a lot of information is that it can become confusing to you. So what I do is I really try to simplify this, and I put together two main aspects here that I look at. So the first aspect that I look at is the Fed juice here, and that's the red arrows here. And then I really like to look at the planetary speed index, which are the black arrows here. And when both of these line up, that's when I'm going to get an advantage on these trades. So let's take a look at what that might look like. So right here, this is an example. So the red line indicates where the Fed juice is in that advantage down, like this. And the black line indicates where the planetary speed index is down. And when they both agree, that's what you call an advantage. So that's the period where the markets can have the ease of movement in that direction. And then to the upside, it can be the same thing. So like right here, you can see that this was in a buy here, and this was already in a buy. So the ease of movement was up to here. So that's the idea of what we work on here. We try to take independent cycles and line them up together. And then that way we can see what's going on with the markets. So moving along here. This was just Corona cases here. So we're up over 3 million right now on that. So what I'm going to do is I'm going to leave this PowerPoint, and I'm going to take a jog over here to look at the actual S&P 500 right now on this graph. So this is the most recent graph of the S&P 500, and this will show you essentially what's going on right now. So the advantage right now is still to the upside because we have this Fed juice, which is down here, and this is still in a buy. And this Fed juice here has been in a buy for the whole month of April. So I just want to emphasize that. So you can see right here that this whole month of April, the Fed juice was in a buy up into here. And so that's really important. So these green bars on the chart correspond with the Fed juice. So the Fed juice is down here. So that's in a buy down there. And then you can see that the market wanted to move up with that Fed juice. So that's important. And then we were able to identify these periods here where you have an advantage, where you have the Fed juice, and then you also have the planetary speed index lining up. So in this case, all the way back here, you can see this was the first sell period into here that lined up there. And then the next one was March the 12th to the 22nd. And then you had this period into here from the 25th to the 6th. And then this was the next period into here. And this uptrend has been kind of interesting because it's been in a kind of a meandering path. So, but like I said, the main thing here is that the Fed juice was able to capture this move and was able to keep us long the whole time onto this. So that's important to look at. Now, the next thing that we're going to take a look at here is Qualcomm. So someone had asked about Qualcomm. And what I'm going to do is I'm going to actually show you some different ways that you can look at cycles, solar cycles, lunar cycles, to get an idea of a forecast going forward. So this is a software that we use. This is Titanium, Market Trader Titanium Plus. So what I'm going to do is I'm taking this Qualcomm stock here, and I'm going to put a solar cycle on it. So right now I'm going to add a cycle down here, so you can see down below that now we have a cycle down here, which is the solar cycle of Qualcomm. So the important thing about this solar cycle is that it's a longer term cycle, and it allows you to see these broad moves in the markets, okay, specifically to this stock. So this cycle down here corresponds to the stock up here, okay? So you can see that these broad-based moves more or less correspond with the movements in the stock, and so that's important. And you can go back through time and see that these line up pretty good with the peaks and the troughs. But one of the things that you have to look at is you have to look at the past versus the present. And so what you see right here is that everything to this side of the graph here is the future. So I'm going to show you this here. So everything to this side here, this is the future, and this is the past. And so everything that goes out here is modeled into the future. So one of the things you want to do when you look at cycles is you want to make sure that the future will mold what you saw in the past. So if we take a look back here, if you go back in time here, you can see that this cycle changes a little bit. Now, a lot of the time you see it doesn't change that much. Okay, so this would have been the future going forward here. Okay, but you see that when we had this big fall in here with the coronavirus, that there was a big change in that solar cycle right there. So, in essence, you've got to be real careful with these cycles to make sure that they do go out into the future and they do predict very well. But the coronavirus definitely affected and made this cycle become deeper into here, looking forward into that. So, you can take a look at this and see that if we're just looking at the solar cycle, that Qualcomm is at some type of a peak, as is the rest of the markets. We in the newsletter I talk about this, that there's some type of a high coming in on May the. All right, so looking forward here, this is like I said, this is the future here. So what I'm going to do now is I'm going to add on some other cycles onto this so you can see. So we're going to keep adding different layers onto this. So underneath it, you can see here, there's another cycle added. It looks identical because it is. It's like another solar cycle. But what I'm going to do is I'm going to add a lunar cycle here, and I'm going to overlay the lunar cycle underneath this solar cycle. And so again, this is just to kind of give you an idea of how we can look at these different aspects. Now, one of the interesting things about this is that when you have these two types of cycles lined up, that a lot of times you can actually get an advantage that doesn't show up in one or the other. So for example, this solar cycle here, you can see that the solar cycle was hitting a peak right here, and the lunar cycle was also hitting a peak right there. So, when you look at that, you can see that there was an advantage there. They both lined up, and that lined up exactly with the high right there. You see that right there? So that lined up with the high right there. So, the idea is that you might want to look at not just like a solar cycle, but also a lunar cycle. So this is one of the reasons why in the newsletter that I combine multiple strategies to come up with my own curve to give you an idea. Now, I'm going to continue to do this and show you that you can add even more. So this is a lunar cycle here. The green one is a lunar cycle by the sign of the moon. So like when you're talking about it moving through, Cancer, Aries, Sagittarius, that's what this is, and that's the position of the sky. But you can also do a lunar cycle based off of like the full moon and the new moon, and that would be down here. So if I add that cycle in, you can start to see these cycles line up and overlay together. Now, this is interesting because we're going to talk about Fed versus non-Fed activities. So it's very difficult to use a pure cycle when you have the Fed coming in like into here. This is when the quantitative easing began into here. And so when that occurs, that it's very difficult to see the cycle, to see the market play out with the cycle. In this case, Qualcomm did a pretty good job, but still, when you look at something like the S&P, they ran opposite of the cycles because the Fed just came in and overrode it completely. So this Qualcomm actually models a little bit better than just the straight the straight S&P, which I'll get into the S&P in a little bit. The S&P is really kind of a mess when you just look at the cycles, and this is why you have to look at the Fed juice. You cannot just look at cycles with the S&P. And now again, these are planetary cycles, and we can also do regular cycles, which I'll add one on in a minute. But again, let's go back through time here and take a look at some more examples of this. So Qualcomm here. So here's another example here, going back into time. Take a look at this one here. This is interesting. So right into here, you can see that the solar cycle was reaching a peak here, and then the lunar cycle here was reaching a peak down into here. And so this is also corresponded with Qualcomm rising into some type of a high right there. So what you want to try to do is look at multiple cycles and line them up to try to gain an advantage. Just from the astro side of the equation. This is not the Fed side. This is not the tape. This is just pure cycle. So when you start to see situations like this, you can definitely see an advantage in the markets. And then when you go forward a little bit in time, you can see that the opposite can occur too. You can see a situation where it hits a low, like into here, and this can correspond to a low here on the lunar cycle too. So, again, lining these up is not a bad idea. And what I'm going to do next is I'm going to show you a way that we can look for different types of cycles to put on. So just to review here, this is a solar cycle here. This tracks the sun. So this is the sun as it moves across the sky. And this is very similar to what you would look at as like an annual cycle or like the Stock Trader's Almanac. I don't know if any of you have ever seen the Stock Trader's Almanac, but the Stock Trader's Almanac is Stock Trader's Almanac. I'm going to go to the chat here for a second to see if anybody has any questions here. We got kicked off before and then we came back on, so okay, if you guys have any questions, just let me know. I'm just going to type in here, hello everyone. Okay. So just let me know if you're able to see it. I think we are. Okay. All right, so I'm just going to continue down here now. So just to clarify this, so this is like the people are coming back. That's good. Again, this is the first time I've done a stream here, so I'm learning too about how this works. I think I might have chose too much bandwidth at the beginning, which is why it was cutting out, but I've locked down my network here, so I should have good streaming from here on out. This is the Stock Trader's Almanac. So you may have seen this. If you go into your favorite bookstore, you can pick a copy up, and what it does is it talks about how the market performs on different days of the year. So it might say like, well, if you bought the Dow on this date, it went up 66% of the time the next day, or if you sold the S&P here, it went down, 30% of the time, or whatever it is. That's what this is here. That's what this blue line here is. This is a solar cycle. So this date will repeat itself exactly across time. And so this is why I really like the solar cycle. So if we go into this November peak here, like what this is basically telling us is that every November, right around the 1st of November, right here, that Qualcomm makes some kind of a peak. You see that right there? That's what that says. And that's why I like the solar cycle, because the solar, you could find a cycle that curve fits this better, but I really don't like the concept of a curve fit, because the more and more you try to curve fit something, probably the less and less accurate it's going to be. And that's just my experience across time. So let's take a look at this and go back and scroll back, and let me just show you some examples. So every November, we would expect this to make some kind of a high. It was right before it collapsed, but that still was right before the collapse. If we go back here to 2017, you can see that it started to rally into November into here. If we go back into 2016, I got about 10 years in here. Sorry, that was 2016. This is 2015. You can see that this was a high right before a collapse into here. So that's another thing I want to bring up. This really is in the context of what's going on. So if you are in a downtrend, the context of a high could be right before it collapses, right? If you're in a bull trend, that the context of the high can be right before it hits the peak. So this is what I talk about all the time, relative market bias, that you have to be relative to what the market is doing. And you have to understand that too. It's going to be different. And you could have, bull market, bear market, or you could have either one going either way. So I'll go back here let's go back into 2014. So, this one peaked a little bit before. So this just shows what we would call some type of an annual pattern into here. And if you're in a bull market, you got to take it in the context of the bull market too, because like if you have a dip into here, it's just the market's going to dip into itself, rising up like this over time. And again, this is like a very free form look at this, but the idea is that this is some type of an annual pattern going forward. And again, it's not a perfect pattern, but it gives you an idea, a more or less idea of what's going on. So you're able to see for the year what is the pattern of the year. And again, you can't expect these things to work 100% of the time, but they do give you a very good idea of the annual behavior. Now, the area that this really shines is in the context of commodities, because commodities have cyclical components throughout the year. So like, for example, there's a driving season for oil, there's a heating oil season for the home, There's a growing season for corn. There's seasons for gold and silver. So depending on the market, this solar cycle really comes into play. I think more so for commodities than it does for just stocks. But I'm using Qualcomm as an example here because I'm trying to use something that's neutral, that's not in the service, so as not to overlap in what we're doing right now. I'm just using this to show you the concept of it and how this works. So again, so I take the context of the Fed into all of this. So if you take a look down into here, this lunar cycles down here really don't change too much. And notice they don't have to be identical. They're slightly different lunar cycles, but what you would want to see is when they line up together, you tend to get the strongest, peaks and whatnot when they line up together. So down here, you see this lunar is a peak here, this lunar is a peak here, this solar is a peak here, and that's right before you get this slide down here in the market. So that's one way to look at this. Now, another way is, if I don't want to look at just a solar or a lunar, because I think this is pretty much, I think, mostly what you need in terms of cycles. I'm not really a big fan of curve fitting, but what you can do if you want to look for like a cycle that's supposedly hot, you can go here and you can look for what they call dominant astrocycles, and you can try to find one that is the hot cycle of the moment. So what I'm doing here is I'm searching the markets and I'm looking at all these different cycles here. And then what this is a heat map down here, and I'll put it on the top here. Hopefully we can see it. So what this is like a heat map of different types of cycles. And when it turns red, it's going to tell me which cycle is the hottest cycle to look at. So if I was looking at right now, I'll be looking at this one right here. And so this will tell me this is Venus, Mercury heliocentric. So right now that's the hot cycle of the market. So what I might do in that case is I might go down to Venus, Mercury. And so I might add that one to the chart. And again, this is just to show you an idea of how you might put together a logical flow to determine how a security is going to move across time. I mean, this is not just such a simplistic thing as just throwing up a cycle and going with it. You really have to research this to get a good idea. So we want to look at this, and this is heliocentric. So I want to look at heliocentric longitude. And so this is down here. So this is the cycle right now that is modeling the Qualcomm the best down here. So this was, I look at the solar, I look at the lunars, and then I might want to say, well, which cycle down here is the hot cycle to look at for Qualcomm? So it's this one down here, which is the Venus Mercury cycle, heliocentric. So, all that means is that instead of being a cycle around the Earth, we're looking at a cycle around the sun. So heliocentric means, we're looking, instead of the sun being here and the Earth being out here, that our vantage point is not here, and our vantage point is here now. So these cycles are always direct. There's no retrograde motion because everything's orbiting the sun. And so then we might add that information. So you can see that this one is actually modeling it very well. You see the cycle into how this fell down into here with the S&P 500. And then this one rose up into here like this. So this one is actually modeling what's going on in Qualcomm the best right now. If you were looking for a curve fit, this is the hot hand right now in terms of cycles. So again, this is like a top-down approach. You got to really kind of slowly ease your way into this to see how you might want to approach this. So this one also shows some type of a high coming in on Qualcomm, coming in around, I would say this is about May the 10th into here. So this is showing a top into here according to this cycle, and then this solar cycle is falling into here too. But again, I would warn against just taking even this information as trading advice or trying to time a cycle, because we really have to put a lot more thought into this. And that's one of the things about the newsletter. When you sign up to the newsletter, these are things that took me years to figure out. The planetary speed index, this is something that it took me a long time to understand what was going on with that. And it took me a long time to understand what was going on with the Fed. When 2009 and 2010 happened, that market started going up no matter what you threw at it. You could throw anything at it, any type of a negative cycle, a Saturn cycle, anything. It just didn't matter. The market wanted to go up because the Fed was strong. So that's why this Astro stuff, while it's interesting, okay, it's super interesting, and you could sit here for hours looking at this stuff. You got to ask yourself two questions. First of all, is it going to be consistent out into the future? And number two, is the Fed going to affect your forecast of this? So I don't really care how good your model is. If the Fed is coming in, and which we'll see with the S&P, that the S&P was actually turned on its head at the lows. It was supposed to be in a down shifting cycle. It's almost as if the Fed knows these cycles and comes in at the lows exactly. They know exactly when they need to act, and they come in and do that, so it can override these cycles. So that's something to consider too. So yeah, so we're kind of layering ourselves into this, and but this cycle here, like I said, this is the hot hand right into here. So anyway, so the next thing that we might want to look at, like a regular cycle. So let's just say that in addition to the astro, like I have my solar here, I have my two lunars here, and I have my hot hand cycle, let's just say down here, the one that's the hot hand, which again, I'm not too big of a fan of doing that, but I'm just putting it in there to show you. Let's say that I want to look at just a regular cycle, like a 30-day cycle, a 20-day cycle, something like that. So what I'm going to do is I'm going to open up another cycle window, and this time I'm going to actually just go for time cycle. So I'm going to go in here to regular cycle, and I'm going to search for the most common cycles where the most money is made. So what I'm going to do is I'm going to search between 30 to 50 days on the cycle. So this is a little bit longer than a lunar cycle. And I'm going to make the quality a little lower at about 100% down here. I'm going to let that find the cycles for me. So what that's doing right now is that's looking for cycles that are going to match what's going on with Qualcomm. And it's going to give me some type of a spectrum. It's going to give me a spectral analysis, called a spectral analysis. And it's going to give me like a graph like this. It's going to show me these peaks. And each of these peaks represents a certain period. Like that might be 30 days, that might be 35 days, that might be 50 days. And so I'm going to pick one of these peaks and I'm going to put that cycle on the graph. So I'm going to show you how to do that next. And like I said, this is just to give you a methodology of how to do this. This is to show you how you might create a game plan to look at a specific stock. It's not a simplistic thing. This newsletter that I write takes a lot of time, not just to write, but to put the thought into it to give an accurate forecast on the S&P. You know, the whole point of all this is not just to give a bunch of charts and to say, look at all the charts we have. Wow, the whole point of this is to be accurate with what we're doing. And so that's the idea here. Okay, so here's a spectral analysis. So this is what I was talking about here. So right into here, you can see these peaks on these graphs. So this has nothing to do with astrology, by the way. This is just a regular cycle. So you can see these peaks here. You see a peak 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 here. What these peaks represent are different types of cycles. And so I might want to go and say, okay, well, I really like this peak over here because this to me represents some type of a cycle that I might like, or over here, or even over here. Okay, so if I go over here and I pick that peak down there. If I look down here, it says it's about 47.42 days, something like that. So 47.4 days down there. So what I'll do is I'll type in 47.4 days. So I'll go here and I'll type in 47.4 days. So that's the cycle that it likes. So what it's going to do next is going to calculate that cycle down here for me. So now underneath here, I have an actual cycle that's every whatever it was, 47 days. And so now this is a cycle that really has nothing to do with astrology, but it's just a cycle that you could throw on there. So it's something else to look at to see when these patterns line up. So you can see here that when this is at a low down into here, that this is a low here, and this was climbing at a top up into here. So I'm trying to move this out of the way so you can see it. So like right here, let's see if I can, right here. So this corresponds to here, and then this corresponds to here. So this would be representing Qualcomm here. This would represent this cycle. I can actually, let me put this cycle on top of the actual Qualcomm to show you what they look like superimposed. So if you take a look here, let me put this up here. So there it is superimposed on that. So you can see Qualcomm according to this cycle here. So this is not a planetary cycle. This is just a cycle based off of a certain number of days. So you could also do this on a long-term pattern on like the S&P or something. If you wanted to look for long-term cycles, you could use something like this, a spectral analysis to see it. But again, this is not based upon the planets. So, you know, can cycles be good? Yeah, I think cycles can be good, but cycles tend to come and go and fade and appear and disappear, and it's kind of tricky. I think the planetary cycles are much more reliable in general. But again, you could put this as a tool that you might use in your analysis. So here's another one to look at down here. So the idea is that when you find enough cycles to look at that you think are good, then you want to take those cycles and you want to uh, put them together and create some type of an aggregate curve. And that's what we do in the newsletter. I create that combined signal on the newsletter. So that's just that's how it goes. I'm gonna show you an actual picture of this for a second. I'm gonna show you last month's newsletter since it's over, and that way we're fair to our subscribers and what that looks like for the S&P. So give me 1 second here. I'm just opening this up. So newsletters. If I go to April, I'm going to show you a picture here of the essay. So this is the newsletter here. This was April's. And I'm going to go down to the bottom here. And I have all these graphs down here. But I'm going to show you an example of what that looks like when you put all these together. So you take all of these. This is from the newsletter. And you essentially have this aggregate of all these different symbols. And they don't necessarily agree. You can see that, like, for example, the planetary speed index was into here, and then it really kicked into gear here towards the end of the month. Was it buy and then a sell and then buy again, and then the solar cycle was different, and they don't always agree. But you can get these regions in here where they do agree, and then you get a stronger signal. So what I do is I take all of these and I add them all up, and you get what's called a combined. You get a combined astro sum signal down here. So that's what I get down here, and then these are just different events like FOMC meetings and phases, and I put more and more this month too. I have economic events on there this month. And then you put them together and you get a cycle like this, and you can see here that, you know, it gives a peak. It gave a peak rolling up into about the 24th of the month, and then it kind of pulled back here towards the end. But again, this isn't necessarily what we base 100% of the S&P off of, because the Fed juice comes into play and the planetary speed index comes into play. But this gives you kind of a master roadmap of what to expect going forward with that S&P 500. So that's just an example. That's last month's, and this month's looks very different. Last month, I expected the month to be bullish, and we saw that S&P was essentially, like I said, that S&P was bullish the whole month, and that was because the Fed juice was essentially going up the whole month. So you really have to combine both of these together to get an idea of what's going on. So that's just an example with Qualcomm. So, you know, really what I would care most about if I was just trying to put together something, I probably wouldn't be looking at these ones down here. I would just be looking at the solar cycle and the lunar cycles together. And that's what I would be looking at. But the problem is that when you have such a strong Fed into here, you really need to be looking at this stuff more on a bullish basis, because the Fed can come in and start with all of this quantitative easing and really push this market higher. So you got to look at the two of them together, and that's why it's very important to balance that out. So that's the example here for Qualcomm. And so, you know, if I just looked at the solar cycle, I would say definitely this is coming into some type of a high into here, but you know, this can change depending on what the Fed's going to do. So even if the solar cycle is falling, if you have a strong Fed, maybe this just goes sideways, you know, and then these smaller lunar cycles pick this up into here. So you have early May, and then this is falling, and then you have some type of a peak into here. So for an example, let's say the market was falling out here into June, let's just say. So let's zoom in here. So let's say that the market's falling and it's trying to come back down and challenge the low into here. Let's just say that it does that, and you're looking for a chance to short, probably somewhere here into this early June period, because you have a falling solar cycle, and then you have the lunar cycles making these peaks into here. You see that? So that's how you might read something like that with the lunar cycle. So Anyway, if you want to go and take a look at that, the gold package here, I'm going to kind of run you through this real quick. This is what we see every day here. So this is the Twitter page here, and each day we post something called the closing bell. So I post a summary of the 11 different symbols here, and I actually will line up everything for you. So for example, if you don't want to sift through the charts each day, like let's say that's too much to look through all the charts, this is just a summary of what's going on with all the different charts here. So for example, it tells you what the tape is doing, it tells you what the cycle is doing, and then it tells you if there's what the advantages are in these different markets. So it just gives you like a one-stop view of everything that you can take a look at that. And I've also included now stop prices into here, so you can take a look at that. So anyway, so if you guys want to reach me, you can always reach me, Shane at wolftraderfutures.com. And I think I'm going to wrap this up here. So that was my example here with the Qualcomm. If you want to go check out the newsletter, there's a 7-day free trial, so you can try that out. And if not, that's fine too. And I guess that's it. So I will talk to you guys soon until our next webinar. Have a great day, and I'll talk to you soon. Peace out.